What's going on, everybody? My name is Lamont, been a full-time trader for 7 years now, part of the Chart Guys team for half of that, where I head up our futures room and the swing report. In this video, we will cover some of the hype sector names as per usual, hit you up with some trade zones, and go over the overall market as well. So let's get into it. All right, so starting off with NVDA, our bellwether for now, because as long as the semis are leading the way up into blue skies, then overall buyers are going to be pretty comfortable. And, speaking in generalities, right? And even if the semis and the tech does start to weaken, if those outflows from tech and semis, whatever, if those start flowing elsewhere, then we'll know that the market rotation is still more or less healthy, and buyers will still be okay. So as we were discussing last week, the daily no change level, pretty much the last breakout point was 746.11. So for NVDA, as long as this prior high here is not violated, then the buyers are still doing okay, because that would mean the sellers have not yet negated the change from this breakout. So this looks very similar to SPY or QQQ, all-time high breakout. They have this gap here, local resistance. And as long as this gap remains unfilled, buyers will also be pretty confident, right? Because essentially this gap is indicative of change, right? And so as long as the gap is present, then the reaction that what caused this change has not yet been negated. So a new daily higher low has been set here at 771.25. Obviously, the conservative trade zone was no good because, well, they're just much stronger. Remember, these zones are conservative. I can only see you guys once a week. I mean, unless you enjoy the community. If you are interested in joining our very robust community, live traders posting their activity all the time. We got fellas in there doing trade review on the weekend and stuff like that, jumping together and doing, recording their metrics and whatnot, just essentially helping each other improve. If you're interested in that, links in the description below. Great community. Come check us out. So anyway, remember, these trade zones are the most conservative trade zones, right? I'm only going to see you once a week. Again, unless you join the community. And so I need to give you something that's bigger picture, right? So just realize that the daily no change and these trade zones are pretty much where it's cheapest to find out. If the sellers are having problems even getting back into the trade zone during the middle week, you can also be making, if you're a more active type, you can be making plays, right? Fading it. Because if they don't come back down here, you can fade any move down that doesn't come back down here as a general rule of thumb, right? Because in this market so far, sideways higher, everything is just fine. Even this selling, right, which was probably just an anticipation to the earnings, even this selling was really not that big of a deal, even though it was 10% off the highs. But you'll notice where they get caught up is pretty much right where there's a little bit of daily balance. So as long as that's the case, as every single time you fall down, the sellers start entering, they don't break the prior area of balance, or in this case, they don't even come to backtest the prior area of balance, and the buyers are doing just fine. Okay, so going forward, we can just move this just like this. And it's also a very reasonable trade zone, because again, as long as they don't trade through this guy, then there's no problem. Okay, and now the issue becomes, all right, well, what if they really do drill next week and they come cratering down and they violate this trade zone? Fine, it's still going to be okay, more or less, as long as they're over this guy. So it can be a situation where you pop over this new high, no follow through, and then come down and make a new low. Lower low, that would be a red flag. But if there's no acceptance in here, then you can still fade the moves down here. So moves back over this 746.11 level should have these buyers trying to do more of this. Okay, so conservative trade zone for the next week, while we're being considerate of the fact that these buyers have been on a tear already. And so if we do see some kind of liquidation break effect, we just want to be mindful of where we can make plays next. And I went over this in detail on Friday's morning stream if you are part of our Slack community. Anyways, so that's pretty much it for NVDA. Buyers are looking totally fine here. I think SMCI also a lot of overnight action. So if we just shift to the 24-hour chart with ETH on, then you'll see, because the SMCI is potentially, I think it is being confirmed already, added to the S&P 500, a bit of a run into Friday's close. So flirting with all-time highs again. So these semis are positioned well to just break out. The consolidation has just been incredibly healthy. There's really no red flags at all. Remember, we were looking out for this to fall, potentially fall even more, and it would still have been fine. If they could come all the way back down here, and it still would have been fine structurally. And so the fact that they didn't even come close to that just lets us know so far these buyers are still maintaining control. So we can probably get a better assessment. All right, so we'll just move this in the short term, that's very reasonable in my opinion. Like we can just move this down a little bit. Right, if we can look potentially get that pullback entry, that'd be great. Just recognize though that if these breaks don't get follow through, then we should expect the lows of the range to be tested. So if on Monday we get a break, no follow through over this high, come back down into the range, the seller should be trying to come and test the lows of the range again. That's just how the market works. If you're not going to break out and advance, then you're just going to balance. If you're going to balance, you should see tests of both sides. Will they successfully get to the next side? I have no idea. Nobody knows. But that's what we should expect, and knowing what to expect is enough to make trades. Okay. Oh, I'm sorry. So anything over 812 is going to be good for a daily higher low. And that is it for SMCI. So again, no red flags here. And really all we have are projections to go off of now. So we could say the target should be 1117.33 on the month. And for the year, we're already at R5 for the year. It would be pretty notable for this to keep ripping. It, surpassing R5 is not a super common thing. They just barely did it. It's very notable. We shall see. Okay, so Bitcoins obviously did not come into our conservative trade zone either. There's really very little selling out there right now. Like obviously things can change very quickly, but as of right now, when you have Bitcoin flirting with all-time highs, you have like altcoins that are pressing all-time highs as well. It's just, there's just not really much selling going on out there. So no real red flags even in the crypto space right now. As long as 53000 remains supported for these buyers, they're doing just fine. And even the aggressive scenario I believe that we laid out last week didn't shake out, where it was just a move back into this value area high. And then, if there wasn't acceptance into this value area high, then buying it, if it were to come back, it didn't even test it. So these buyers in Bitcoin are really, really strong. They didn't even test this prior high here. So very strong right now. Lots of space for a daily higher low. Anything over 5091.0.23 is going to be good for that. And we just move this whole idea up, right? Because it's the same. It's always going to be the same, right? As long as this structure is supported, buyers are doing just fine. They should try to come back here first. And then come back here next. All right, so that is pretty much it. Space for that higher low, weekly higher low as well. Lots of space for a weekly higher low over 38501. So again, no red flags. Looks totally fine. Ethereum, so again, did not come into our trade zone. Buyers were just too strong. Barely even came back. They didn't even test it. So after you break out of this on the first retracement here, this is a little lower low under this low, and it pretty much holds right to the penny, 2868.32. Breaks it by just 30 cents. So again, very strong buyers here. Space for a daily higher low over 2868.32 upon any retracement. And although it didn't come into our trade zone, you'll notice that price is pausing right at our target. So again, the value of this VP is that you know where they're trying for next. You never know if they're going to succeed, but you always know where they are trying for, right? Because in a nutshell, right, buyers are trying to go to blue sky breakout, sellers are trying to go to zero. On the way to blue sky breakout is going to be these key areas. So this 10-5 structure from 2021, you'll notice that backtest of it off to the races, backtest of it off to the races. They try to play defense. Once they break under it, now it flips into resistance. It's problematic here. And now lo and behold, it's problematic here again. So that's why we were using it for targeting. Now this idea, we'll just move it right on up, right? Because this still all makes a lot of sense. We can just move this up here, something like this. And essentially this would be a play for a weekly higher low now. Something like this. That would be great if we can get that. And after this bit of supply, if they were to see higher highs, I guess we would have to look at this fellow over here. But we can just take it one step at a time. We'll mark it up right now. Why not? Okay, so with higher highs, then eyes on 385, 3.84, 4017.56. Okay, but I mean, anything can happen. I would be surprised if there wasn't some consolidation coming sooner rather than later. And that would honestly be fine for the buyers, right? The buyers would prefer to see a little bit of stalling here before a move back into, potential break into new highs. But no red flags. Tons of space for a weekly higher low as well. Anything over 2165.01 be good for me. Moving on to CCJ. So this is notable. CCJ, these sellers, they made a very earnest attempt here to try to get back down to this key point of control, 38.87. It should definitely be their goal. So the fact that they failed to do so, getting stalled right here at 39.77, nearly to the tick, is notable. That's very close, and yet they failed. You had a lower high, lower low situation that should have been smashy down there. You had another potential for them to make a lower high here, and they didn't. That being said, they also didn't break over 43.06. If you do break over 43.06, that would essentially affirm that this value area high is being supportive as well. They should be trying to come up to 45.28 next if that's the case. Okay, so daily higher low and higher high. That being said, this is still just sideways. So like I said, if they don't break over 43.06, we do make a new low under 39.77. It's right back to looking for a test over here. Anything can happen. You never know. But as of yet, that is a very notable failure, right? It's no different than here. You fall from the value area high, come back down, hold it back to stuff here, and they try to press higher. Now, obviously, the context is a little different from when this backtest occurred. They had first broken over it and then held the backtest. This time, we're falling down into it. Still, call it for what it is. As of right now, there's still demand coming out of this zone. Okay, so aggressive buyers, it could be looking for moves over 43.06 and targeting 45.28. In the short term, something like this is pretty reasonable. All right, trying to get back here. Trying to get back here. Okay. Oh, right. Whatever. I don't really care about any of that. And then the tan. So this guy came into the trade zone that was shared with you guys and popping out of it. These buyers should be trying to come here first for 5.21. It would be notable for them to fail getting there. Now, you do have to call it for what it is. There's space for a lower high under this high over here for 8.24. And there's a lot of volume traded here locally at around 44 and a quarter. So it wouldn't fault you if you have already taken off some of your profits, throw your stop under this low. If you stop out, you just make a little bit of a trade and you're ready to take more trade in this zone. If instead you're more of like a position trader or scaling kind of a approach or whatever, then you're probably waiting for at least hourly oversold conditions before you start scaling into this zone, which I think we did have. Let me see here. Yeah, so pretty much hourly oversold conditions, top of the trade zone, very reasonable initiation, plenty of time to chop it up already. Plenty of time to have taken your profits already. If you did, you're great, you're sitting pretty. And into next week, this trade zone remains valid. Okay, so space for that lower high, again, that is under 48.24. They have also now made space for a higher low over 41.44. I don't really care about this little rinky-dink one here. I would just consider this one the meaningful one for 1.44. And again, even if we come back down here, back into the trade zone, stop you out, this trade zone is still very reasonable. You can come back in with hourly oversold or leave a starter on, and that's pretty much it. Like me personally, I would prefer to be on the right side of the V, so to speak. So a situation like this would be, it would have to be a play on this day or a play on this day, but that's just the way that I like to get it done, session to session setups. It would have to be on this day. So this day you would come into the trade zone on the 26th, right? And then you get a strong open over the point of control of the prior session. You move down, you don't touch it. So you buy the move back over the value area high. You can chop it up at the open or the high of the day. Throw your stop under the low and then see what the market will give you. You get stopped out the next way. You make the same play again, makes you do it twice. And so it's a little bit frustrating. So 10 is actually one where it's probably easier if you're just a bit of a position trader. Comes to the trade zone, put some risk on, knowing that your risk is over here. So you can put a starter on, for example, right? Like with a third of your risk capital or half of your risk capital. And then for your second half, wait for like a move under this point of control and then a move back over it, deploy that, and then throw your stop for everything under the low. And then that way you'll never even be close to max risk. Just, one potential example for how you might use these trades on. Okay. Obviously, if you're more advanced and you already have your own setups, then, have at it. But yeah, these are very, very clear. Like all of these trade zones that are shared are always going to be based on key structures, right? It's not based on any kind of derivative indicator or anything like that. There's no mystery behind the B or the S or, You know what I mean? Like when the indicators that have buy or sell signals or whatever. It's none of that, right? The idea is simply based off of pure price action structure. As long as these certain structures are not violated, we know that these buyers are trying to get something done, and the reverse is true. As long as supply is not being violated, we know the sellers are trying to get something specific done. Okay, so that's pretty much it for TAN. MSOs pretty much spent the entirety of the last week retracing, so that's a bit of a red flag, but at the same time, you did make a lower low with lacking follow through, and you still are holding over the key structure, which is this guy. So as long as these sellers are unable to get back down to $8 even, then that would essentially mean that they are finding a good amount of demand here, but they really need to find acceptance back over this guy. This 923 to 10.5 structure, this guy is super key because staying over here, we should expect more of this. Staying under here, we should expect more of this, you know? So very, very key spot. Pretty much a perfect rejection from the value area high. Failure to get to the daily no change level relative to this breakdown is a pretty big red flag, 9.78. So, you know, again, all about $8 here. If they can't come down to $8, move back over this 9.37 level, then the odds of us trying to come back up here will improve greatly. But again, these key levels, $8 and 9.37. The more acceptance we can find over 9.37, that's over this guy, the more likely we stay within all of this. Okay? So very, very key going into next week. This is, you know, not the best situation right now. Potentially setting this monthly lower high here. If they can break 8.55 next week, technically this monthly lower high, it's a little rinky-dink one, but technically a monthly lower high will be set. So that's pretty much it. I still think it's a very reasonable trade zone. And at this point, if you have, you know, if your average fill was here, if you took some profits on the way up, your stop is under here. If you stop out, that's fine. You can still look for plays, something like this. So let's say you used the trade zone last week or whatever, and so you have one fill. Let's just assume that you didn't even care about anything else, just blindly came into these levels. So your average fill is here. If you took some profit anywhere up here, your stop is under here, that's fine. You should have a profitable exit overall or trade overall. If we come back down into here, crack $8, or even if we come below 771, the stop area, if you come back over the value area high, okay, fine, you can buy that, target the point of control first, throw your stop under the low, target this next. If you don't even come down into the value area low and you move back over the point of control, fine. You can buy that, move back over, throw your stop under the low. Again, target this guy first, actually target the prior low first, and then target the value area high and throw your stop under the low. Okay, but acceptance under $8, and I would start to just put it down for a bit and see, you know, let it shake out some more. Okay, so SPY also did not come into the conservative trade zone. Makes a lot of sense. They were just stronger, right? If you don't come back down into 503.50, then the sellers don't get anything done. They just don't do any proving. So actually in the chat room, we smashed this day and this day. And again, if you're interested, day trading with me, futures, pretty much do it every single morning. Give us a shot. Links in the description. I don't know why I did that. Link is in the description below. So anyway, a new daily higher low has been set here at 504.75. Anything over that's going to be good for a daily higher low. New conservative trade zone can just move this bad boy up to something like this, right? High volume area, stop below because we don't want to get too far back into this guy. So something like this is very reasonable. At this point now, we only have projections to work with. And so for the month, R1 is up here at 57.54, so we can look for something like that. For the year, we're looking up at R2 now, which should be a ways away. So something like this, I think, is pretty reasonable in the short term for SPY, for a little bit of a trade zone. And yeah, anything over 504.75, good for a daily higher low. The weekly time frame also has a ton of space for a higher low to be set as well. Anything over 466.43 would be good for one upon any retracement, which there's no signs of that right now. So I guess I didn't even need to say that. Obviously did not come into our conservative trade zone either. Very, very strong. Daily bull flag confirmed. Again, we have projections to work with. R1 for the month, 447.12, just a wee bit higher there. And then R1 for the year is a ways above. So in the short term, again, same deal. You just take this, something like that, very reasonable. I don't know why I did like that. Didn't have to do that. Something like this, very reasonable. I guess we'll go for the year, right? It's blue sky, right? Dream big. I mean, that should be where they're trying to get to. As long as they're holding over the R1, that should be the next objective. So Oops. Alrighty. I mean, we can even be a little bit more aggressive, I would say. Something like this. As long as you don't come back down into this guy. Okay, it's not much risk at all. It's 1.18. So like really conservative, you can even, it's no problem. 2% risk. Whatever. Like if you're aiming for that R1, what was it again? Hold on, let me just make sure. You're aiming for something like this, then even coming out like that, the R multiple is totally fine. Right? It's totally fine. So something like this, very, very reasonable. Things are getting hot though, so just realize the further we get, the further extended we get, the more swiftly things can fall, but that will likely just set up another buying opportunity, at least for a bounce. Okay, so we shall see. But again, very little fear out there, very little selling. The Dow also missed our trade zone, did not even backtest the value area high, very notable. So I think this is fine. We should leave this just as is. Space for a higher low over 387.60, but because we're now ripping into new highs, we could very easily just go sideways here. But as long as we have sideways trade over this structure, again, no red flags. And so I would not change this for the Dow. Just leave it as is. IWM did hit our target. We shared this trade zone back here. Came into the trade zone, spent a good amount of time, took its time getting up there, but now it did get up there. And so if you took this trade zone, then you should be out at least half a position. Throw your stop under this low, no later than this low, I would say. And this is looking pretty good. The more acceptance that they can find over 205.46, then the more likely that they are to take a crack at all of this. So basically, what we're looking at in the overall market right now is the tech sector is ripping. And so if the tech sector were to start consolidating and then money were to flow into these small caps, that would keep the overall market very healthy. So pretty much that's what we can be looking out for in the short term. If that occurs, then really no red flags. If the tech sector starts retracing and IWM also starts retracing, there's no flight to safety. We're not going into the staples or into healthcare. Everything just starts coming down together. Okay, that would be a very notable shift in the tone. But as of right now, we've seen healthy rotation since for like a year now. So that's pretty much it. Oh, hold on. Space for a daily higher low. Anything over 196.39 will be good for one. And as long as we're holding over 199.26, these buyers are going to be confident. All right. Okay, so the dollar, we had a little trade zone here. So this is notable. The dollar is starting to look a little weak here, right? So to hold this and then to fail coming up here is pretty notable. That being said, you get plenty of time to get risk-free on this as well. Throw your stop on the low. If you stop out next week, this is still a very reasonable trade zone as long as this structure is supported. It would be notable for these buyers, these dollar buyers, to fail getting back up here again. If something like this is going to occur again, that would be good for our asset bulls. All right, asset buyers, the market buyers, so that's Bitcoins, cryptos, whatever. They would welcome a weakness in the dollar. Okay, because a lot of the rally right now has been while the dollar was strong. So if the dollar starts to weaken, that would help the asset buyers. All right. Weekly consolidation is underway. Anything over 100.320 is going to be good for that weekly higher low. And that is it. And the VIX, just still no fear, very little fear in the market right now. There's really not much else to say about that. Yep, just a very low VIX reading. So again, the VIX, like the primary thing we want to look out for is if the market is going up and the VIX is going up as well, then we're probably looking at like a short-term correction. But until this thing starts spiking, again, very little fear in the market right now. So we shall see. Again, things to look out for, it would be NVDA and the semis no longer leading. If they're no longer strong, does that money go elsewhere, or is there no safe haven at all? If there's no safe haven at all, that's a problem. But if tech starts consolidating, semis start consolidating, and we see IWM start ripping, or XLV or XLP start ripping, then again we won't be too concerned. Okay, so that is pretty much it. I appreciate you tuning in. Thank you for sharing some of your time and energy with me, and I hope to see y'all soon. Oh, right. If you're interested in joining our very robust, vibrant community of full-time traders, well, many full-time traders, give us a shot. If you want fresh swing pick ideas from me, myself, me, Dan, and the rest of the team send to you weekly updates, sent to you regularly as these trades unfold. Then give the swing report a shot. Otherwise, again, I appreciate your time and your energy, and I will see y'all soon. Farewell.